Welcome to Entrepreneurs Accounting Academy's free webinar tax series. EAA is offering this free webinar series to help businesses know what to comply and how to comply with their tax obligations. I am Songalia. I am your presenter for the free webinar tax series. Our topic for this noon is final withholding taxes. A lot of people are caught unaware of this tax. Some would know about this only when an assessment has already been made by a BIR examiner on a sole proprietorship, corporation, or partnership. Today, we will go over the basics of this tax and discover the types of income payment that would be subject to final withholding taxes. Let's first cover the general principles of your final withholding tax. Now, just a review on our previous webinar tax series. We have discussed one final tax before, which in the form of fringe benefits taxes. Your fringe benefits tax is also a final tax. But today, the final tax that we will be discussing is the final tax that is different from fringe benefits taxes. However, in terms of general principles, this will still constitute a full and final payment of your income tax due from the payee on a particular type of income subject to final withholding tax, the same as your fringe benefits taxes. But let us take note that the finality of the withholding tax is limited only to the payee's income tax liability and does not extend to any other tax that may be imposed on the said income. Now, what are some other taxes that could be imposed on the said income? Say, for example, you paid for a consultant who came into the Philippines to help you on your operations. So you pay them a professional fee. Now, that professional fee is subject to final withholding tax. Why? Because the consultant is not a resident of the Philippines. And since it was paid in the Philippines, that income payment will still be subject to value-added tax. Which is why I said take note that the finality of your final withholding tax will only be up to the income tax liability. And of course, the liability for the payment of the tax rests primarily on the payer as the withholding agent. Now, this normally would have consequences on the payer. Why? Because if, for example, I am purchasing from a non-resident foreign corporation, say a corporation domiciled in Singapore, I'd like to buy computers from them. Of course, the company that I am buying the computers from would not agree at all times that I deduct the final withholding tax on my payments to them, right? Which is why this tax, well, it's a little bit complicated because you have to, just like any other expense which is not subjected to withholding tax, you will also be grossing this up if the payee for the income is not going to permit you to deduct the final withholding tax on the income payment. Okay. Now, the last principle on final withholding tax is that the payee is not required to file an income tax return for the particular income subject to final withholding tax. I am not sure if you were you were listening to the broadcast on the investigation of the Senate on the generals, where one of the accused, when asked why he was not filing any income tax returns, he said that that is because all my income has already been subjected to final withholding tax. Meaning all his income that he received were subject to final withholding tax. So he did not anymore file any income tax return, which actually is also one principle in your final withholding tax law. I hope I made that clear. Now, if you have any questions, you may write them down now so that our staff could filter the questions already. Okay. Now, for the withholding agents, who will be the withholding agent for your final withholding tax? Of course, as I said in my discussion for the general principles, your withholding agents are the persons paying such income. So these persons may either be a corporation, whether engaged in trade or business, an individual with respect to payments made in connection with his trade or business, and of course, all government offices, including government-owned or controlled corporations, as well as provincial, city, and municipal governments and barangays. So those are your withholding agents. So any person who will be paying an income to somebody who is subject to final withholding tax will be a withholding agent for the purposes of final withholding tax. Since he is the withholding agent, well, they are also the ones who's going to remit and report to the BIR the amount of withholding taxes. All right. Now, there is a revenue regulation that actually guides us in the withholding of your final withholding tax. That is Revenue Regulation number 30-2003, which was dated December 12, 2003. This screen may not yet be showing on your screens. Well, it's already showing on your screens, but I just would like to go over this revenue regulation so that we will have a deeper understanding of why agents or distributors in the Philippines are normally subject to final withholding tax. Now take note, I said agents or distributors who have principals outside of the Philippines. Now you will recall in my previous discussions on this webinar on fringe benefits tax and on individual taxation that the requirement for deductibility of any expense paid to any person is withholding. Therefore, if you are purchasing from a non-resident foreign corporation, since you are an agent in the Philippines or you are a distributor in the Philippines, chances are you will also be charging these purchases as cost of goods sold, right? Now, if you're going to be charging these purchases as cost of goods sold, in order for you to deduct them from your income, you need to withhold. If you will go over all the withholding taxes, withholding tax laws that are present in the Philippines, you will notice that for fringe benefits tax, this should be imposed on an employee. For individual taxation, the withholding tax is also imposed on the employee. For expanded withholding tax, which is our next topic, next webinar, it will be imposed to a person or a juridical entity who is in the Philippines. And it is only final withholding tax that would mention non-resident foreign corporations. So in this revenue regulation, let me just read so that I'll go over it verbatim first. It says that agents, employees, or any person purchasing goods or services or paying for and in behalf of the aforesaid withholding agents shall likewise withhold in their behalf, provided that the official receipts of payment or sales invoice shall be issued in the name of the person whom the former represents, and the corresponding certificate of taxes withheld, meaning BIR Form 2307, shall immediately be issued upon the withholding of tax. Now that first paragraph actually assumes that the principal is in the Philippines, because you're going to be issuing your BIR Form 2307, which is your certificate of expanded withholding tax. Now, what if the person or the principal is not in the Philippines? In order for you to be able to deduct the expense, you need also to deduct the final withholding tax. Now, of course, the obligation is still imposed on the buyer-payer, meaning the one paying for the expense. You are the one who's going to remit and report and withhold to the BIR the amount of income tax payment. Now that is RR 30-2003, dated December 12, year 2003. These are for agents, employees, or any other person purchasing goods or services or paying for and in behalf of the aforesaid withholding agents. If your principal is giving you, say for example, the authority to use their official receipts in the Philippines, I'm not even sure if that will be permitted, but let's just say that they have a branch office in the Philippines, then if you're an agent of that same corporation who has a branch office in the Philippines, then you are not the one who's going to be subjected to final withholding tax. It will be the corporation whom you are representing who's going to be subjected to withholding tax. Now, this is the reason why for most of the companies who are, say for example, you're a distributor of CAD-CAM CAE and your principal is in Singapore, you're going to be purchasing the CD from your principal in Singapore and giving it to your client in the Philippines. If, for example, the client transacts directly to the principal, then you will no longer be the one subjected to final withholding tax, but the client, because the client is going to be the one paying directly to the Singapore principal. I hope I made that clear. Okay, and of course, the obligation to withhold is imposed upon the buyer-payer of income, although the burden of tax is on the receiver of the income. Okay. The next discussion will be on the income payments subject to final withholding taxes.